Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso, and today we're going to be talking to you guys about what the heck is a MEC. Anthony, how many times you get asked what a MEC is throughout the week?
Probably a few times a day, to be honest.
Yeah.
Which is good, because if they're asking about what the heck is a MEC, that means they're doing their research. They're reading. They even know what a MEC. They even know the term MEC.
Yeah.
Which is a good sign.
That's some industry jargon there for you.
Yeah. But I do think that this concept is very misunderstood, not only by clients, but I think there's a lot of agents too that don't fully understand it.
Agreed.
Mm-hmm. Yeah. So let's talk about it today.
Let's do it.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
You know, what I think is interesting that there was a time where you could just make one single premium in a life insurance policy, and that's it. You would get you would get a little bit of death benefit, but you get a lot of cash value, and that would grow tax free. And you can also borrow against it, so you have access to it. Now, does that sound a little familiar?
It does. It sounds really nice, actually.
Right. Yeah. That in essence is what a PUA is. And now, Cameron, a PUA stands for Paid Up Additions Rider. And what it really is just a single premium attached onto a whole life policy.
Yeah.
But just imagine if you can get a policy that was just pure PUAs.
Yeah.
Right? That would be awesome.
Yeah.
Right? But eventually the government got wise. Well, that just sounds weird even saying that, right?
Yeah.
I don't know
about it's like cool CPA. Just right. Doesn't happen.
Eventually the government realized how the wealthy were using this life insurance to avoid taxes. Mm-hmm. Right? One thing I also think is interesting, I don't think a lot of people know, IRS hasn't been around forever, right? They were established in 1913. And Cameron, how long has life insurance been around?
Several hundred years, almost 200.
Yeah. So eventually the government wanted to put a stop to it, right? But they have this balance because life insurance does good, mm-hmm. right? So that provides that death benefit or the resources for a widow or widower. Thus, they don't have to rely on the government. Mm-hmm. So they had to come up with a balance. They still wanted to promote the use and the purchasing of life insurance, but they wanted to limit some of the, so it's not so much as an investment, right?
In addition to life insurance serving as a public good, mm-hmm. as we know, the ultra wealthy have been using cash value life insurance for a very long time. There's several books on that. But often what's not highlighted is the fact that politicians have been using cash value life insurance as kind of a safe haven for cash as well. And they've been doing it for a long time. And even up till now, currently, we've got one of the most recent financial disclosures of our sitting president that we will attach in the show notes that shows the way that they've been using cash value life insurance.
Very interesting.
Yeah, absolutely. So what happened is people have been using this, and if I could say, they've probably been abusing it to a certain extent for a very long time. And what happened in 1988, I believe, is Tamara came in and they passed the law. They implemented what is called the MEC line. And essentially the MEC line just says, hey, if you put too much cash inside of the insurance policy, we're going to tax you like an investment, not like the insurance. And so that's what they've got. That was implemented. And to be honest, if we do end up having a MEC policy, Anthony, I would say it's not the end of the world. Would you agree with that?
No, because it's really kind of what they already have.
Yeah.
Right? But it also includes a death benefit. And to be clear, even if a policy is a MEC, the death benefit is still income tax free.
Absolutely. Thanks, Anthony. And so the way that we will design a policy is there is that MEC line. And so what we do is we'll design it to get that cash value right up to that MEC line, just below it. And so if we're just below it, we call it that maximum efficiency contract.
Awesome. Now, Cam, what creates a MEC? Like, how is a MEC calculated?
Yeah, well, a MEC is actually a pretty complex equation, even for you. Anthony,
well,
right?
Yeah. So that's a compliment, dude. Right?
Yeah, so it's a complex equation. right? If we were to share that equation, nobody have a clue what we're talking about. And to be honest, I'm not familiar with what that MEC equation even means, right? So we will put it in the software and it kind of kicks out and says, hey, you're running into some MEC issues. And so we kind of back off the designs for that. But in the simplest terms, really what a MEC is it's a ratio between the cash value and the death benefit inside of a policy. And so typically when we design a policy, when we will run an illustration, what their first MEC calculation that they're going to run is they're going to look at the amount of premiums that you can get into a policy in the first 7 years. Mm-hmm. And so oftentimes the MEC is referred to as a 7-pay test. And so that's kind of the first metric is when you're designing a policy is, hey, what do we need to get in, or how much can we put towards the cash value in the first 7 years without crossing that MEC line? Yeah.
Awesome.
Anthony, what happens if our policy does become a MEC?
I tell you that can, and it does happen. And I remember the first time it happened to one of my clients, and what the situation was, he was following Becoming Your Own Banker, where he was borrowing money from the life insurance policy, and he was charging a higher rate than what the insurance company was paying. Now, when he eventually paid off that loan in regards to the insurance company, the loan was paid. But since he was charging a higher rate, there was still a balance left. And when he went to make that extra payment, he sent it in the insurance company. You know what happened, Cameron?
It MEC'd.
Before it MEC'd, the insurance company said, hey, wait a minute. If we accept this, this is going to MEC. So they would not apply the payment until the client signed a form saying, hey, I know that this is a MEC. You know, we got to keep in mind that the insurance company is here to protect the owners.
Yeah.
And the mutual companies, the owners, are you and me. They're not trying to screw you over. They are trying to help you. So when that happens, they're going to notify you and the agent with enough time, a minimum of 30 days, to allow you to fix it so it doesn't become a MEC. And because of that, that's why I think it's real important that you're active with your agent. So there's an open line of communication. So if something that does happen, hopefully that agent can catch it before that letter gets out. So they can work with you to make sure that it doesn't stay a MEC.
I just had one recently, and it was actually, you said 30 days, and I was surprised. In the note, it said 60 days. You had 60 days to respond to them, to tell them how you want it to be handled. And you're right, they were asking for disclosure if, they wanted to proceed and keep it a MEC.
Yeah, it's a little CYA on their point of view. What they don't want is it to become a MEC, and you don't know about it. Yeah. And then in the future comes, and you go to take some money out, and they send you a 1099, person's going to be a little angry, right? So the insurance companies that we use are here to help you, right? Now, in regards to this MEC line, Cam, why don't you explain how we design these policies?
Yeah, we abide by Nelson Nash's kind of philosophy. The way that we use insurance, right, if you guys don't know yet, is we are looking to maximize the cash value and minimize the death benefit, which is literally the exact opposite on the way that most advisors out there are using insurance and the way that insurance has traditionally been handled. So what most people do is when they sit down with somebody is they're looking to solve for a death benefit amount. They say, hey, listen, let's look at your assets, your liabilities. Let's see how much death benefit we need to cover based upon your income. And let's say, hey, you know what? You need $1 million of coverage. Well, perfect. They'll punch in the age and the amount, and then it spits out an amount. And they say, listen, you need to pay $1,200 a year for that, right? And so they start with the death benefit amount, and then they back into the premium. What we're doing is we're using the insurance, like we just talked about, more like a savings vehicle, right? That cash management vehicle. And so where we start is we start with, hey, how much money do you want to save on a monthly basis or an annual basis? And that's what we're trying to do. From there, what we do is we create a contract, a policy that is a maximum efficiency contract. We're going to get as much cash into that policy, remain under that MEC limit to make sure that we've got tax-free growth and tax-free distributions. And that's the way that we approach it.
Nice.
Yeah, thanks.
And, as I'd mentioned earlier, that before you were able to just make a single premium and it wouldn't MEC. And I know when we're working with people, oftentimes they're sitting on some cash.
Yeah.
Right. Because maybe they don't know where to put it. Or maybe they just sold an investment. So we can't necessarily do a single premium, but we do have a special design where you can make a single deposit, and that will not MEC and is very efficient, right? And if that pertains to you, or maybe you have some questions about a MEC or how to design a policy, or if infinite banking is for you, if that's the case, let's get on a phone call, right? A 15 to 30-minute phone call, talk about your goals. Literally, you can ask us anything, and then we'll kind of see what the next appropriate steps are.
Awesome. Look forward to hearing from you guys.
Go make it a fantastic day.
Take care.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.